Well, yes, Cowboys, it is true. Wall Street does indeed hate Tesla stock. Here this morning, Tesla stock has been downgraded once again by another analyst. I want to go ahead and look at what this analyst had to say. I want to look at what their price target is. I want to talk about the analyst death spiral, I call it, for stock. And Tesla is in this right now. I want to talk about that. I want to talk about if I made any moves in regards to Tesla. We got a lot to get into today, guys. Let's get into this, okay? Wedbush cut its price target on Tesla shares to $230 from $275 on Monday, citing major concerns about the growth plan of Elon Musk electric vehicle company, as well as U.S. demand for the key Model 3. This gentleman says, quote, with a code red situation at Tesla, Musk and co. are expanding into insurance, robo-taxis, and other sci-fi project endeavors when the company instead should be laser focused on shoring up core demand for Model 3 and simplifying its business model and expense structure. In our opinion, with headwinds abound, Wedbush analyst Daniel Ives said in a note to investors. Obviously, Tesla shares fell 4+% in the pre-market trading, and yes, that is accurate. It was down about 4% in pre-market, and as soon as the market opened, it actually opened much more negative. It was in the $195, $196 range, okay? Unbelievable move down. Ives said Tesla's ability to reach its end-of-year production forecast will be a, quote, Herculean task. The company forecasts that it will produce 360,000 to 400,000 vehicles by year end. Ives estimates a, quote, best case scenario of 360,000 to 370,000 vehicles, although 340,000 to 355,000 is a, quote, likely path given the current tea leaves in the field around demand, okay? First off here, let's just, I have some numbers there that basically have green underneath them, okay? 360,000, 370,000, 355,000. Does anybody that's a core Tesla shareholder out there, a long, Tesla shareholder, does anybody really care if Tesla moves 355,000 vehicles this year, 360,000, 370,000? No, I don't know one long that's in Tesla shares that literally cares if they go 355 or 370 or 360. Like, everybody that's a long shareholder in this company is in this one for the huge long-term opportunity in this one. So the fact that they would talk about these numbers like they matter to us longs, like literally, like no one that's an actual real shareholder of Tesla, that's from the long side, cares about this. Maybe traders care about this and trying to hit a specific number, but from the long opportunity in front of this company, what we believe is going to happen for Tesla over the next 3, 5, 7 years has nothing to do with basically them moving 355,000 or 370,000. Like, if they beat those numbers and they do 375, do you think we really care? No, we honestly don't. We care about the long-term opportunity and the fact that this is a company that could be moving 1 million vehicles in the future or a couple million vehicles in the future. That's where the real goal is at, not if they move 355 or 370. Like, it literally doesn't even matter to us. So it's hilarious, okay? He says Tesla is facing a quagmire giggity as the company is in the midst of building out its next flagship factory in Shanghai with the Gigafactory 3. In the early stages of tooling, blueprinting its Model Y for production, which is slated to start in 2020, and ramping production for its mid-range and base Model 3 in the US, all while facing a cash crunch and high expense structure. You see that red text there? That's me, okay? Oh, so Tesla's trying to pull off something challenging. You don't say. Like it's amazing these analysts try to tell us something we don't know. Obviously, what Tesla's going after, what Tesla's pulling off, and what they're trying to pull off is complicated things, right? This isn't just something that you snap your fingers and it just magically all happens, right? Tesla's a miracle company that they've gotten to this stage, and they're a company that consistently pulls off miracles. It's just the way it is. And so basically this analyst is telling us nothing we don't already know. Like, this is hard stuff to pull off. This is not easy stuff, okay? This is not just, just something that happens so easy, okay? It's amazing Tesla pulls off these. I have full faith that they will be able to pull off Model Y, ramping successfully, especially after what they learned from Model 3. I have full faith that the Shanghai Gigafactory will get up and running, and that's going to be a full, production at some point in 2020. 2020. It'll probably start going into some production, maybe even 2019. That one's being built so fast, it's unbelievable, guys. Check out the latest video gentleman posted out of China, basically showing the progress on the Shanghai Gigafactory. Check out that video when this one's over. It's sick, okay? Just type in like Tesla Shanghai Gigafactory. It is crazy, guys, okay? The company is also trying to rein in expenses, I've said, as Musk declared in an email to employees last week. I've said Tesla faces a Kilimanjaro-like uphill climb to hitting its profitability targets in the second half of 2019, while the recent raise of $2.7 billion in capital was smart for Tesla. I've said the company's management, especially with an inexperienced CFO at the helm, is a risk moving forward. A somewhat, I'll give him like that's a somewhat fair criticism. Obviously a new CFO in, you know, he does have to prove himself out and whatnot. But at the end of the day, I really feel like Elon Musk at this point in time really controls the money and kind of dictates, you know, how the company's run financially at this point in time. I really feel like Musk is really running the full show, which is certainly, if you don't feel comfortable with Musk running the full show, then it's not a stock you want to be in. This is really a stock that you have to really believe in, you know, the CEO Elon Musk. And if you don't believe in him, then it's not really a, you know, a stock you can really be in. Let's just be completely honest. If you don't feel like, you know, because Musk is really the guy who's directing the whole show there. Let's be very clear about this, okay? To show you another breakdown of how much Wall Street really hates the stock right now, there are 15 analyst sell ratings on this stock right now, okay? And then there are 10 holds. There are no strong buys from what I see right now. And there's about 11 buy ratings, okay? So 15 sells, 10 holds, you know, but yet the consensus price target is $301. Figure out that one, right? Okay. And this comes after several downgrades last month, obviously, on April 22nd. Tesla was downgraded at Evercore on slowing demand across all models. Then a few days later, Tesla's profitability will not magically return, an analyst says, as Q1 was a debacle for Musk. Let's go ahead and downgrade the stock once again there. So we just see this, you know, downgrading from Wall Street. Wall Street just does not like Tesla stock right now, and it is the way it is, okay? So what did I go ahead and do in regards to Tesla stock today? And then we'll talk about the analyst death spiral and why you should maybe welcome the analyst death spiral, okay? Well, what I went ahead and did is I bought another 29 shares of Tesla this morning. I got them for $196.66. It was just under a $6,000 trade there. And so I'm thrilled to get some more shares in Tesla, and I will continue to be a buyer of Tesla shares as they, you know, continue to be weak like they are now. I'll continue to kind of nibble off shares, you know, 20 shares here, 15 shares here, 30 shares here, okay? So the analyst death spiral, you know, I always say an analyst can be your best friend or worst enemy. I think in one of my courses I have an actual, like a full video like dedicated to the fact that an analyst can really be your best friend or worst enemy in this game, okay? Here's the analyst death spiral for a stock that basically happens. An analyst comes out and downgrades the stock, okay? This can make the stock price go down. All of a sudden, you know, those clients, they sell out of the stock, or it's just kind of like negative sentiment around that stock because, oh, an analyst came out and downgraded it. Stock moves down, okay? Then the stock moves down, so some analysts start actually cutting their price targets because they're like, oh, now our price target that was way up here, we have to bring it down because we're going to look really stupid since the stock is way down here now. So let's go ahead and cut our price target for the stock. So analysts start cutting price targets. And what does that go ahead and do? Well, that goes ahead and sends the shares down more. The stock goes down even more, and this starts becoming like a fulfilling prophecy, okay? And so then the stock continues to go down, so analysts start thinking, shoot, man, I should probably come out and downgrade the stock because it just continues to move down. We're way up here. We're going to look stupid. Hey, the stock's way down here. Let's go ahead and downgrade the stock. And it causes the stock to move down more. And then more analyst price target cuts. And it's like literally like a fulfilling prophecy, and they just continue to move the stock down and down and down until eventually it bottoms out. And that's what happens with all stocks. They eventually bottom out, and then they start moving the other way, okay? But the inverse can also happen. I've seen it a million times, not just, you know, this happen, but the inverse, where basically it'll be an upgrade and then the stock moves up. And then the stock's moving up because it has momentum in general. There are buyers coming in the market. Then all these analysts start raising their price targets, causes the stock to move even up more. And then an analyst comes out and upgrades it again. And it's like literally this, but in the inverse way, so the stock just continues to go up, okay? And this is why an analyst can really be your best friend or worst enemy, but it it depends on if you're a buyer or seller, and this is really kind of the way you should view it. If you're a buyer in the market, okay, you're trying to buy a stock, you're trying to buy more shares in a stock, you're trying to, add to a position, then really you want the stock to kind of be in an analyst death spiral at that particular time, because that's going to give you better and better buying opportunities. Obviously, you want to buy as many shares as possible each time you go to buy those shares. Let's say you got $1,000 a month to put toward a stock, right? You want to be able to buy those shares at the cheapest price possible. So if you're a buyer in the market, this is kind of actually what you're looking for. Now, if you're a seller in the market, you hold shares of a stock and you're trying to sell out of that position, you don't like that stock, you don't want to be in that stock, then obviously this is not the situation you want to be in. If you're trying to sell Tesla shares right now, you don't want to be in Tesla shares, this is an absolute nightmare for you, because the shares literally just continue to move down pretty much day after day or week after week. If you're a buyer, it should be very welcomed, okay? But if you're a seller, you should hate this. If you're a seller, the inverse is what you want. You want to be in a situation where you're being able to sell into strength, where an analyst just comes out and upgrades a stock, and they say the price is going to go up even more, and oh, we need to raise our price target for the stock. That's the situation you want to be in as a seller. So you're going to probably hate this. If you're someone trying to sell out of Tesla shares, you're going to not like this at all. But if you're a buyer, what would I could have bought, let's say, Tesla shares are buying at $296 today. How many shares could I have got with my $5,700 at $296 versus how many I got today at $196, okay? So if you're a buyer, you should welcome this. If you're a seller, obviously you're not happy at this particular time. But I don't see this kind of going away. We're probably going to bottom out pretty soon here. I don't want to make any call on, a specific price. I would say if I had to guess, if I was forced to be put on the spot and say, oh, we're going to bottom out somewhat soon, I would say probably somewhat soon. Can I see Tesla shares going lower than, let's say, 150? Probably not. Outside of maybe a mass recession, I can't honestly see Tesla shares going under 150. Everything's possible. It could happen, okay? 180, maybe that's where we bottom out at. That's where the stock hit, a few years back. I think that was in the 2016, I think it was like February 2016 or something like that. The stock had kind of like bottomed out, and that was the lowest it'd been in years. Right now, there's only one time in the last 5 or 6 years that the stock has been this low, okay? And that was I think it was around February 2016. So, all things are possible. We'll have to see how everything shakes out. All I know from a buyer perspective of Tesla stock, although it's annoying to see, constant negativity around the stock, from a buyer perspective, it's literally the best situation you can possibly have, because you can just get so many more shares for such a better price than any other situation, guys. So anyways, let me know what you think about this analyst in that comment section. I would love to hear from you guys. Do you think he's right? Do you think he's wrong? What do you think about Wall Street in general and how they gang up on stocks? I would love to hear from you guys in that comment section. As always, make sure you smash the thumbs up button if you enjoyed this video today. Thank you for watching and have a great day.